almost everything you flip over is made in China. It's got the biggest tariffs. So prices of things are going to go up and businesses are going to struggle. Sales are going to come down. I think this is forcing us into a recession. And of course, when there is this much uncertainty, gold finds the sweet spot. Gold did have a pretty sharp pullback here. And this was right when the stock market had that huge wave of panic selling. And this is what people need to be aware of. So right now, gold is still in a bull market. It is still strong. It's in a phase where it can continue to push higher. My next upside target is 3,275, which is very close to hitting now. And then we'll be able to reanalyze the next move. But the selling that we saw in gold, this is what happens when we hit a full recession and a stage 4 bear market, which I think is coming over the next couple of months.
Gold maintained its strength above the $3,200 level during early Asian trading, extending gains following a brief pullback on Monday. Investor sentiment remains firmly in favor of the precious metal as trade tensions between the United States and China intensify and expectations grow for a more accommodative stance from the Federal Reserve later this year. The geopolitical uncertainty and monetary policy outlook have driven renewed interest in safe haven assets, with gold leading the charge. Silver mirrored gold's momentum, trading at $32.05 after touching an intraday high of $32.39. While both metals have enjoyed recent upward pressure, analysts remain divided on the sustainability of silver's rally. Market strategist ChrisVermeulen noted that despite a sharp pullback coinciding with a wave of panic selling in the stock market, gold remains firmly in a bull market. He suggested that the current trend points toward a move to the next resistance level near $3,275, after which the market will require reassessment based on evolving economic and technical conditions. Major financial institutions echo the bullish sentiment. Goldman Sachs and UBS have issued positive forecasts for gold, citing robust demand from central banks and the metal's proven role as a hedge against recession and geopolitical instability. Their outlook upgrades, first introduced in March, were reinforced following gold's 6.6% surge last week and a fresh record high above $3,245 an ounce on Monday. Silver, on the other hand, presents a more complex technical picture. Vermeulen cautions that its recent rebound may be a dead cat bounce, signaling that downside risks still linger. However, from a technical standpoint, silver trades within a well-defined rising channel. Holding above the pivot point at $32.05, the metal is edging higher toward immediate resistance at $32.67, with a potential upside target at $33.25. On the downside, support remains at $32.05, with a more substantial base at $31.34 should selling pressure return. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Gold's on fire. There is so much uncertainty, and I think I think these tariffs are going to make things very expensive in America. And simply everything's going up 20 to 100%. Almost everything you flip over is made in China. It's got the biggest tariffs. So prices of things are going to go up and businesses are going to struggle. Sales are going to come down. I think this is forcing us into a recession. And of course, when there is this much uncertainty, gold finds the sweet spot. Gold did have a pretty sharp pullback here. And this was right when the stock market had that huge wave of panic selling. And this is what people need to be aware of. So right now, gold is still in a bull market. It is still strong. It's in a phase where it can continue to push higher. My next upside target is 3,275, which is very close to hitting now. And then we'll be able to reanalyze the next move. But the selling that we saw in gold, this is what happens when we hit a full recession and a stage 4 bear market, which I think is coming over the next couple of months. When the stock market has consistent selling and the VIX is elevated it's just never-ending pressure, we will see it happen in gold. We'll most likely see gold pull back and have a very big correction in price and wipe out a bunch of the gains right now. But at this point, gold is the clear leader. That there's all kinds of chaos, there's uncertainty, and gold continues to be that favored play. Same with gold miners. Gold miners have been doing very well. If we look at gold miners, they're pushing up and hitting some big highs, and they're having a big gap and a big exhaustion type of move. I think maybe that we're going to see a little bit of a pause or pullback in the precious metal space for a minute, for a couple bars or so, but I'm still bullish on gold. I do think longer term, though, I think later this year we'll be able to pick it up at a lower price. It'll build a launch pad for it to go a whole lot higher in 2026 and beyond. But right now it is the crowded trade. Everybody seems to be piling into it, and that's what everybody wants to own at the moment. Silver's having a nice move today, up 4%. It's finally making a little bit of a comeback. Silver is very speculative. It's great during a new bull market phase. It can perform exceptionally well, but it naturally kind of stair steps its way higher, and then it always takes the elevator down. This is a pretty sharp drop. I mean, if we look at the drop just in the last few sessions, 22%. That's not something I like to really mess with. That's why I like gold. It's much more stable. A huge pullback in gold is like 5-7%. And it requires a bloodbath in the stock market for gold to pull back. And that's what happened. But silver takes it on the chin. It has rebounded really just into resistance. If we draw a line across here, there's pivot highs, there's pivot lows. We have a cluster of moving averages, the 150-day, the 50-day, 20-day. So it is running into resistance. It's definitely nowhere near all-time highs, nowhere even near the highs from just a few weeks ago. So silver's making a comeback, but to me, it has broken to the downside. It's had an impulse move down. So when it has a strong move to the downside and it breaks multiple standout pivot lows, which it has broken a series of them, once you've broken through enough support levels, it obviously has some pretty strong momentum. I always look at these pivot lows as like floors in an apartment building. If you break through one floor and then stop on the next one, you did a little bit of damage. You didn't have a ton of momentum. But when you bust through 5 floors, you know that is there a lot of selling. It's a heavy thing. It's got a lot of momentum to it to the downside. And so it's busted through a bunch of floors. And now it's just kind of having that reaction bounce. It's oversold. It moved too far, too fast. And now investors are kind of gobbling it up, saying, oh, it's undervalued. And they pile in, and you get this kind of what I believe is kind of a dead cat bounce. Now, maybe silver wants to go back up, test these highs and go up. But overall, it is a more volatile, more difficult way to make money in this particular environment. When we have a full recession and a bear market and it comes to an end, silver and miners will be the preferred play, and we throw gold in the back seat because it's too slow. But when we're in a major market top, gold is the play. It's slow, it's more consistent, it naturally wants to push to new all-time highs versus to deal with all this noise and waste a bunch of time and stress in it.
According to market strategist ChrisVermeulen, the global economic landscape is beginning to echo conditions seen ahead of the 2008 financial crisis. Growth is slowing, fear is mounting worldwide, and gold's sharp rally suggests that the anxiety isn't isolated to a single region, it's global. With inflation remaining stubbornly high and unemployment rising, Vermeulen believes that the U.S. may already be in a recession or rapidly approaching one. Federal Reserve Governor Chris Waller echoed these concerns in a recent address to the Chartered Financial Analysts Society of St. Louis. He warned that if President Donald Trump's proposed tariffs on imports are sustained, they could drag the economy to a near standstill. While these tariffs may trigger a short-term spike in inflation, Waller argued that the Federal Reserve should be ready to cut interest rates more aggressively than anticipated if the economic slowdown deepens. Waller projected that tariffs could temporarily lift inflation to around 5%, but noted that the Fed's primary concern would likely be preventing a full-blown recession if this inflation is transitory. In such a scenario, he said, I would expect to favor cutting the FOMC's policy rate sooner and to a greater extent than I had previously thought. Let's get back to the interview.
I believe the market's running out of steam. All the signs are here that the bigger things, to me, a lot of macro data, economic data is slowing. It's showing signs that there's a transition coming. The money's been flowing through various assets in different sectors, telling us that there's huge fear. Gold spiking is one of the most powerful kind of global barometers that this isn't just like North America fear. This is like the whole world is getting ready for some type of huge reset. And this is what we saw just before the 2008 financial reset. And now we know banks can go bankrupt literally overnight. We know the housing market can implode. I mean, there's a lot of different reasons for the housing market imploded, but people are nervous. And I believe we're going into a recession. I kind of feel like we're already in one. I think in Canada, where I'm at, where it's like unemployment's already like 7.5%. I think things are about to get really ugly. And the stock charts, typically asset prices move first and then the economic data follows. Investors are savvy, they're smart. We can look into the future and say, things don't look good. Looks like inflation's here to stay. Prices are going up. Sales are starting to slow. And so investors are like, well, I got to start trimming back. These stocks aren't going to perform very well. And so the stock market and assets sell off in fear. And then the data actually comes later saying, oh, yeah, earnings are down on most companies and things like that. So follow the price, and the news typically follows. And if we look at the SP 500, this was the really interesting thing. If we look at the SPY ETF, for example, obviously we got this huge drop, but it's interesting because everybody through here was trying to pick a market bottom. And all through here, they're trying to pick a market bottom. And then even over here, and more or less just even this bar, we have data that shows, when people are trying to pick a bottom, and everybody says, I'm picking the bottom, and I'm telling everyone, don't try to do it. It's going to hurt. And then what happens is we have a very weak close on a Friday, which is this bar. And then this was the Monday. This Monday's open. It opened sharply lower, flushed down in the morning, massive volume. And everybody who's trying to pick a bottom finally hit a breaking point where they had to get out and take the loss. And this was also a tipping point where people who just held on to their long positions also hit a fear level where they say, that's it, I'm done, I'm out. And they exit their longs, and then the market rebounds right after it. The market is perfectly designed for people without a real proven strategy, emotional traders trying to pick tops and bottoms to absolutely screw them over. And Monday was exactly that. And then this huge 12% rally on the QQQ a couple of days ago is just enough to like rub the salt in the wounds, give people FOMO, really piss people off. This is what the market does. And we avoid all this because we can identify when the trend changes. We actually saw the trend change right up here on the 26th of February. We exited the market because everything was telling us get out. And then the market's just gone into this, it's a nightmare scenario for most people. First of all, it's a news-driven move, and at this point, this is just robots and a bunch of people chasing the news, trying to trade the news, driving things up. He's delaying, just like he's done in the past. There was a rumor about it, I think, the day before, and I think Trump even said on his Truth, whatever his platform is, he said something like, "This is a buying opportunity." And of course, I think obviously he knew what was coming down the pike. And of course, he says that the day before, then the market rallies. He's very smart. I mean, I think they are playing a game that people listen to every word he says now. He said it's a buying opportunity, and then the markets rallied 12% the next day, which there was a ton of options traded just before the news and the spike that huge money was made. There's a lot going on. But if you just get rid of all of that conspiracy and all that BS stuff and try not to get caught up in it, because anything where there's money involved, there's always manipulation. And it's always been there. It always will be. So I know some people get hung up on all this and how people are making money. But if you look at it from a pure technical standpoint, first of all, it's a news-driven move. So I don't give it much power. I don't care if it's a 20% rally in one day. In fact, the bigger the move, the more of a BS move it is, in my opinion, just because it's news-driven and it's an emotional herd, everybody trading on that. So whatever happens on news, usually the market gives it back within a few trading sessions.
As markets digest signs of a looming economic slowdown and central banks hint at a potential policy pivot, gold continues to gain traction as a reliable store of value. The sustained rally above $3,200 signals broader investor concern over inflation, weakening growth, and escalating trade pressures. Meanwhile, silver's volatile moves reflect the uncertainty clouding global markets, with traders watching closely for confirmation of a lasting trend. With rising fears of a recession and mounting geopolitical friction, the precious metals landscape may be entering a critical inflection point where safe haven demand could redefine market dynamics. How do you see the role of gold and silver evolving if economic indicators continue to deteriorate in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.